Good afternoon, everybody. Welcome to our webcast on selecting an option strategy. I'm Connie Hill. I want to welcome each and every one of you here today. Take some effort on your part to join our classes, and we appreciate the effort that you put in. Now, this class, we're only talking about option strategies. And have you wondered, sometimes you get into a strategy and you're like, well, what if the stock does this? What would the price of the option be? Right? And sometimes we review some of those tools with you, and sometimes we really don't. Today, we're going to focus on a tool that you can use for any option strategy. It's the Theo Price Calculator. So we're going to spend some time with that today as we explore some of our strategies that we want to work with. Now, I hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having Cameron May in the chat to assist. Cameron will field questions maybe I can't quite get to, or specific requests that you might have. So he's got my back, but I'll keep my eye on the chat. Let us know what your questions are. You want to follow Cameron on X as well. He's Cameron May CS. Let's go ahead through our disclosures, and we'll talk about where our agenda is going to lead us. Options carry a high level of risk and are not suitable for all investors. What we talk about here is intended for educational and informational purposes only. Don't consider it a recommendation. Schwab does not recommend the use of technical analysis as the sole means of investment research. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version, and we're going to use some of the unique tools that the software offers today. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. All right. Now I'm going to ask you, and I'm going to have you chat this in. We've got people joining us now right after the clock starts. How many of you are familiar with, comfortable with, and use the Theo Price Calculator? Okay. Go ahead, chat those responses in. I'm going to gauge your response here so I know how deep to go into that topic. All right, you guys, if you are in the Dallas area or can get to the Dallas area, that's going to be our next market drive event on September 20th. So we still have seating available. Sometimes these events, they book up really quick. So take our word. If you really are somewhat interested, go ahead and book it so that you can be there. Then we've got Chicago, October 4th, Orlando, October 10th. Okay. So we'd love to see you there. It's free. Because you're one of our clients, you are free, and we treat you like royalty when you're there. People just love it. All right. Now, typically in this class, we'll take a look at market conditions. They probably haven't changed a whole lot. We talk about what option strategies might benefit from current market conditions, or it could be something that maybe we just haven't touched on for a while. And so it might be a strategy that I say, hey, let's kind of explore this one a little bit. It could be fine in this condition or not. We'll always look at some examples on the platform. In fact, I have a lot of updates that I need to give you before we go and do some new trades in our portfolio. So I asked you the question, how many of you have been using and are comfortable with using that Theo Price Calculator? Chris and Aldolfo are no's. Sharon's been using it. Lola's not comfortable, but you're kind of aware of what it is. Ricebird doesn't use it. Chris is going to be in the Dallas workshop or market drive event. You're going to enjoy that, Chris. Life in the Fast Lane uses it often. Kevin's a yes. All right. Bill's not used it. All right. We have some variety. We've got some of you here that are kind of using it, and you're like, yeah, I know what it is. And others are like, what? I could use a Theo Price Calculator and see based on my assumptions maybe what the price of an option could be. Yeah, that's what we're going to get into here today. Greg says, you don't remember the Theo Price Calculator. There's a lot of tools on Thinkorswim. There are. This is one that option traders really probably want to be familiar with. Okay, and I don't stress it a ton, but I think it's a good thing for us to review here today. We're going to go look at our market conditions real quick, and then we're going to hop back. So look at this brand new high, S&P, NASDAQ again today, creating new highs, and the SPX is closing. Man, it closed pretty close to the high. I don't know if that's exactly the high. Let's see, the high is 64.46.55. It closed on its high today. Oh, man. Nice. Okay. It's above the 10. It's above the 30. It's a bullish candle breaking above the previous peak, the previous top. Yeah, definitely bullish in that arena. NDX. NDX, that is not the right ticker symbol. Let's try it again. That stock had a high. The NDX put in a new all-time high today as well. And it closed, let's see if it closed near its top. Its high was 23,849.5, and it closed just a few cents below there. So those two markets really performing well. The Russell 2000 was up early today. It was up early 2% going on. It looks like it closed above 2%. Big long candle today. Getting back to on a let's give us a few more months here on the Russell 2000 so you can see this Fibonacci, because we were kind of taking it as of this, not the absolute peak, which typically I would do, but the high area here, doing a Fibonacci down to the lows at this time. It might be worth redrawing this and putting it down here at the lowest point. In any case, looks like it kind of is above this area, 61.8% retracement area on the Fibonacci, that could act as resistance on the way up, hopefully would act as support as the index continues. Okay, so would you say you've got your bullish hat on, probably looking for more bullish opportunities than bearish? There will be bearish opportunities, and we'll explore that in some of our classes. But today we're probably going to really stick to the bullish side of things. So here's the strategies that typically we might target if we were looking bullishly. Long calls, cash secured puts, long call vertical, short put vertical, long call diagonal spread, and a synthetic stock. I would say, some of these are a little bit more kind of like barely bullish. And some of them are like, yeah, I am way bullish, man. Get out the whip and hit the bull. I am way bullish. And something like maybe a synthetic stock or a long call. And to some degree, the call diagonal, possibly there as well. Not really going to focus much on the bearish strategies right now. It can be, in fact, we're going to look at a calendar spread that we did as a follow-up trade. It was kind of sort of a neutral to slightly bullish strategy, okay? And so some of these might be quite range-bound strategies, or just expecting a little bit of movement, maybe a little bit up, a little bit down, that are classified here in the neutral strategies. All right, let's pop over back to our Thinkorswim here. I want to start first with monitoring our current trades, because there is a lot going on. Okay, so let's start out. We're going to start with our first trade here, AMD. Current position on AMD is a January 175 call that we actually rolled from a different AMD long call that was super deep in the money. And so if you want to extend the trade, it's been working for you. Yeah, that's what you might do, is you go, okay, let's go further out in the duration of the trade. And generally you're ending up with different strike prices. Okay, so we are long this one, and we sold against it this August 195 call that expires on Friday. So it's only got 3 days to go. Now, this position has looked like it currently is pretty much most of the day, but I wanted you to see it instead of taking action on it without you, okay? This option price, the price that we bought it for was $23.10, and currently it's down a little bit. So what has really helped that overall position so that we're actually up on the trade? Yeah, it's been this call that we sold against it. So this one is 2 different strike prices, 2 different months. So we know that's going to be a diagonal, slightly bullish. We're using the calls. So we sold it for $425 for that one contract. It's now worth 6.5 cents. Should we go buy it back? Well, I think we should. All right. Well, sometimes when you capture a majority of that trade, it takes a little bit of time for it to absolutely go to zero. I want you to take a look at the chart here with me on AMD. And I did, this is when we initially got in. This is when we had our new roll that we sold. This is our new position down here when we got the 175 contract, or 195, no, 175. And then we sold this 195 in August against it. And it's just kind of been going sideways. So our longer dated option is experiencing some time decay, not an incredible amount because it's not that close to options expiration. But this is what's helped our trade out here, is that we sold that long call against it. So what if we do this? What if we today buy it back, and because it's still kind of sitting there neutral, let's go sell another call. Let's do it. One thing you need to be aware of is that even though we're going to do this, and this will be the third time we've sold a call on AMD against a longer dated option, the system doesn't keep track of all those different transactions. I mean, yeah, you can see it in your history. You'll be able to pull up AMD, see all of those transactions. But in terms of your P&L open here, it only keeps track of what the current positions are, what the entry point was, what the current value of that option is now. Okay, so that really points to one of the things for a trading journal, why it might be helpful to use a trading journal. After we walk through this, I will show you where you can find that. For those of you that are like, oh, I didn't even know that that was a thing, right? Keeping track of your numbers, absolutely, it's a thing, especially if you're trying new strategies, okay? Diagonal call might be a new strategy to some of you. Okay, so let's do it. If the stock, this one is 195, and here's the strike price up here of 195. Man, we might still feel maybe that's a good strike price to target, right? It's out of the money a little bit here. Let's do this. Let's go down and let's figure out what we want to sell. Now, we could use any of these, really. The difference is going to be in terms of how much premium we'll bring in, and kind of trying to balance letting it decay pretty quickly so that we can hopefully capture that amount. So you can see there's our position there on the August 15s. And as we come out here, and we're looking at maybe, say, a 30-something delta, we could look, what is this one? We had said maybe 195, we could sell clear out there again. That's a 19 delta. If somebody wanted to, you could. We're going to kind of pull, we're not going to go that far out of the money. In this case of what we're looking at here, why don't we target this, the 185? It's got a 34 delta. It's got 24 days before it expires. And it's got, over 400 contracts on there, almost 500. Okay, so yeah, there's a lot of liquidity. We're just going to be selling one. So there should be no issue in terms of not being able to get in and out of the contract, because there's a lot of them exchanging hands. If you felt more comfortable going out a little bit further to the monthly expiration, you certainly could. And you can see there are thousands of call contracts out here. So it just kind of depends on what you're looking for. I want to do a little bit shorter based one because we haven't done it. Okay, so it's not so much that I think it's better, because really we have several in the window where people typically like to sell. That 20 to 40 to 50 days window. We've got a 24, a 31, a 38, a 45. Okay, so there's several you could choose from. But for the moment, let's go with the one that has 24 days to expiration. I said we were going to do the 34 delta. So we're looking to sell the 185 strike. So I'm just going to make me a little note. 185 is what we're going to sell. Just kind of keep a little note here. And now we're going to go back and we're going to do what's called rolling. Okay, rolling just means shutting down one trade, juicing up another, putting up another. That's all that the rolling means, and doing it in one motion. It used to be a big deal and made a difference to people when they were charged a transaction fee in addition to a value per contract for trading. Now pricing on Schwab isn't that way. We just work with whatever they charge us per contract, that's 65 cents. So it's not as big of a deal. So if you're a person that's like, I'm not, you're going to show me, but I'm not going to get the roll, just do it in 2 transactions. Just come out here and buy this back and then go in, sell the other one, okay? But I'm going to say here, we're going to create a rolling order, and it's going to call it a calendar because we're going to be using it. It thinks we're going to use the same strike prices. We're not. We're going to modify this. But the thing that's important here is the bottom order here is we're buying back our current contract, the 195 that expires this week. And here I said we're going to do the 185. So let's grab 185. And then we're just going to change the time frame on this. And this one, we were looking at doing the September 5s, okay? And that is going to generate a credit for us of 408. Great. Okay, we're buying it back cheap. And the old contract, and we're selling a new one that's generating this credit. That's pretty close to what the price of the option is, but we do have to pay off the 6 cents on the old contract, okay? So that's it. Don't worry that it said calendar when we picked it. Don't worry right now that it says diagonal, okay? Because really, after we submit it, it'll go buy back our 195. We'll be short the 185 against our longer dated January contract. Okay, any questions on that? Let's see, Riceford said transaction history to be more accurate. Riceford, is that in reference to using a trading journal? Because our P&L open doesn't, it's not going to keep track of all these transactions going out in the months past. Yeah, I think that's where you're going with that. Oh, look at this. We have a survey. You guys know from time to time, we'll put out a survey here just to kind of gauge your feelings about this particular session. And so it's really easy. I like easy surveys. Okay, 2 questions. You just plop in the radio button, plop, plop, and you can be done there if you want. There's 2 questions you can answer if you would like. And I also encourage you to use that as room to send me information that maybe as a topic you'd like me to cover in one of our upcoming sessions, like I'm struggling with this thing, or I would really like some pinpointed help in this area. And if it's something we can incorporate into one of our classes, I love to do that. So you can use that space for that as well if you want to just communicate something to me. Now, Cameron will post this again. Okay, he'll post that survey again. If you want, just click on the link right now. It'll sit in the background. Then when it's time for you to leave, you can fill the survey out. We really appreciate it when you do that. So Stephanie says, I keep an Excel spreadsheet of trades by month. Perfect, Stephanie. Yeah, that is, I think, it takes time to journal your trades, but I think if it's done right, you really can learn a lot from it. You can learn from maybe where you pick up on bad habits that you're doing. Maybe you pick up on something you just did not anticipate at all. And wow, now you have experience with it. That documenting can really help you with that. So I'll just encourage you to do that. We are going to send our trade on its merry way. And I told you where I was going to go show you where that trading journal is. Now, market's closed right now. I'll make sure we get filled on our order in the morning. Now, I'm just going to hop over here to, let's try this. I'm going to jump over here. This is our Trader Talks page. You guys hopefully are familiar with this. I hope you're a subscriber. If not, click on that button to subscribe and you can do it. I want to actually take us over here to the account summary. And we're going to go to Learn. And we're going to go to Schwab Coaching. Okay, it's on the calendar of the Schwab Coaching where we can find this trading journal in a couple of places. So we are going to scroll down here where it says View Calendar. We're going to select on it. And then I'm just going to go to, I don't think it's in this class. I think it's going to be in Trading a Smaller Account is going to be one place you can get the trading journal. Barb typically teaches this class. I've been teaching it for a while. She's out recovering from knee surgery. So that's one place you can get the journal. We only know that it works in Excel. It may work in other spreadsheets, but I haven't tested it. Nobody else here has tested that, okay? If somebody else has out here, they could verify that or not. And then there's a couple of videos here about how to use the tabs. The verticals tab's very specific for that strategy, and it does have some nuances in it. that you want to be aware of so that you can use it properly. The other place that you can see this is going to be in the Thursdays class that I teach on short verticals. And let's do that. So here's the short verticals. And again, you can see that trading journal, those two videos to help you out with that, okay? Or you could do like Stephanie said and just build your own Excel spreadsheet, keep track of your trades there. This journal might give you an idea of maybe what you might want to incorporate into that journal, okay? All right, we had three of our class trades that actually hit their profit targets today and went out because we had already set up an order for it. Okay. All right. Yeah, Adolfo, that is the trading journal. Gabrielle said, is this a bid or an ask? When we're selling the call, we're looking at the bid price on it. I didn't see your question in time when I was actually looking at that for you to see. So for buying, you're going to be using that ask column. When you're selling, you're going to be using the bid column. Okay. And when you do the roll, it kind of takes the midpoint of both of those strikes, the one you're buying back and the one that you're selling. It just kind of gives the midpoint price with the expectation that, hopefully it'll settle somewhere in there. Okay. These three trades in the middle, Delta Airlines, Google, LRCX, notice we're out of them now and they hit targets today. Delta Airlines, let me show you the chart there. We're just going to do this pretty quick. This was a trade we had to exercise some patience on. Okay, you can see we got in it here. We had a short put vertical at 53.51. Finally today with this big move that Delta Airlines had, boom, it went up, finally hit our target. But you can see part of the time it was below that strike price. We had 3 days there that it was below it. But we didn't panic. We knew we still had time for the trade to work out for us. We just let it work. Theoretically, could we have been assigned early, especially at the point when it was in the money? Yeah, theoretically, that's true. Paper money doesn't do that. So you do need to be aware of that. If it's down here, down here, down here for a long time, yeah, you very well could get assigned. Paper money won't do that, but we're only down underneath it for about 3 days. Okay. On this particular trade, our initial credit was for 60 cents. We bought it back at 15 cents, giving us $45 per contract. We had 10 contracts out there on this one. So it was a nice $450 profit on that trade, not including commissions and fees, because we're typically not going through that. Now let's look at LRCX because it too hit its target profit. It too, we had to be patient with. We got in clear back here. This is July 9th. I mean, it seems like a long time ago because we have classes, we put on new trades, so it seems like kind of a long time ago. But the same thing here, it was bouncing up off the 10-period moving average. That's the blue line. For, it looks like maybe 3 days here, it was below the short strike price here that we needed it to stay above. And so it was down here for a little bit. Yes, we could have been assigned theoretically again. Moved here today, finally went up, hit our target, which we're really happy about because it was due to expire this Friday. So we were in the window of we got to get out of this trade. And had it not hit our target, we would have done something and manually gone out and changed the order. We didn't have to because it hit it itself. Now, this last one I want to show you is Google. Google was a calendar, right? On the calendar, we did a long call calendar. We did a couple because we wanted to experiment with that strategy a little bit and see how it worked. Now, I'm going to zoom in here. On the calendar, basically, we have 2 different expiration dates, but the same strike price. We were working with the 200 strike price. We had sold a call, again, that was going to expire this Friday, so we needed to do something with it. And the other one's longer dated. I think it might be in October, okay, is when that was. If you remember on the risk profile, and I'm going to attempt to draw a little bit. Okay, I'm not the best drawer, but when we looked at the risk profile, when we put this trade on, it kind of looked a little bit like this, where peak profitability was right here at $200, and it's hard to hit that peak. It's hard to catch that peak unless you've got an order sitting there that says, hey, get me out if it goes to 200. And that could have been a way to approach it. What I was seeing here is that yesterday it was kind of in that area, closed a little bit above 200. Today it was making a strong candle move quite a bit above it. And we were kind of in this area, roughly, okay, this area of the risk profile where we knew we weren't going to hit a peak, but we had kind of a range there that we were like, yeah, we want to take profits and get out of the trade. Now, I don't know that it was exactly here. Maybe it was more down here. In any case, that was $450 just sitting there. The option was due to expire Friday. And so we had a choice. We could just buy back that short call or just close the trade altogether. I chose to trade the trade altogether because that was our intent when we got into it. So nice little profit there. Actually, I said $445 in that on Google. Yeah, it was a $450 profit, not including commissions and fees. Normal says, can I use the trading journal to track real money trade? You can do whatever you want with it, Normal. Okay, it is yours to use. It's even yours to go and destroy. If you mess up the formulas, you can just go download another copy of it. Lois letting us know you can use it in numbers on a Mac. Okay, she said if you want to know how to convert it, if you know how to convert it, perfect. Yeah. On spreadsheet programs, if you pull it up in the spreadsheet program, that's not what it's written in. Typically, it'll give you some verbiage like, okay, do you want me to convert this over into my spreadsheet's language? And you say yes. Okay, that's what's going on there. Excellent. All right. Thanks for helping out with that as well, Cameron. Okay, those are the trades. We had to do some things with things today. Let's move on. I want to expose us to some new trades. Now, I sent a message out on my X account. I did a little post a little bit earlier today, and some of you may have seen this and some of you may not have seen this. Let's see. Oh, I don't want to post. Let me do this. This will show my last post here. And I said, what do these ticker symbols have in common? $W, $YOU, we're spelling out U, okay? And Zeta, $Zeta. And I'll tell you, initially my thought was, well, they're all ticker symbols that come towards the end of the alphabet. And initially it was like, they're all in a row, except we're missing X. It would have to be WX, Y, and Z to get 4 of them in there. But there are some that may have some possibilities for us here today. So the first one we're going to take a look at here is YOU. You guys may be familiar with the service. You can sign up for it when you go to the airport, so you can go through the short line if they go through and do this background check on you. This is the company that does that. Okay, this is called Clear Secure, ticker symbol YOU, which I think is kind of clever. Okay, what's going on with this stock right now? Well, it had some great earnings a couple weeks ago. And what I've drawn in here is a flag pull where I went from the bottom of this candle to the top of the shadow on this candle and drew in our height of the flagpole. And then it's been consolidating kind of sideways, like a flag in a stiff breeze. Okay, sometimes flags do that, or sometimes they'll pull back this way. This one was flying straight out. What did it do today? Boom, it broke out of its flag pattern. Let me remove that. And so what we're going to do is we're going to say, great, we have a measuring stick that we could possibly use this as a potential target because the expected move would be essentially the length of what the flagpole is. Okay, so I'm going to duplicate the drawing. There's 2 ways you can place the drawing. One is to place it kind of at the bottom end of your flag consolidation area. That would be the most conservative target. Okay. The other way we can do it is we can place it right here at the breakout area kind of just where your eye sees it. And you can see it gives it a little bit more of an aggressive target here. And I'm going to just click off here. That looks like it's going a little bit above 38. Okay, 38.61. Now, many times we won't look for that entire target. I would say that's fairly aggressive. If that stock were to move, man, we'd be happy campers about it. But I'm going to say it's a little bit aggressive, so we might not look for the full move. Now, it looks like the price of the stock closed at 33.29. So let's suppose we want to do that price. Actually, I'll just use the calculator here. Not the news, go to the calculator. Current price of the stock is 33.29. That's where it closed. And what if we go for the target at 38? Okay, take off the cents above it and just go 38. That means we're going to be looking for $4.71 of movement on a $33 stock. That's a lot. Okay, that really is a lot. But let's show you how you could use the Theo Price Calculator with this, okay? That's what I started with. This is a tool that a lot of you'll want to be comfortable with and understand. Now, this stock, you know, it traded a decent amount of shares today, but it doesn't have weeklies at this point. So that's all right. We're just going to use the September monthlies here. It's got 38 days. We're good with that. We are going to target a swing trade, okay? But I want to kind of look at this before telling you which strike price we're going to necessarily use. Or maybe I could tell you which one I'm thinking of using here. Yeah, because we'll do it on it. I wanted to do the first one that had a 60-something delta, okay? So here's a 50-something delta. 67 is our first 60-something delta. So I actually want to use the 32 strike price, okay? Now, in order for the calculator to appear on your screen, you need to have the column chosen. And so up here, where it ignores, I made that a little too far. Right here is your layout area. And I've got delta, open interest, and then you can't see the rest. The rest is volume, probability of expiring out of the money, and then this column here is theoretical price calculator. If you've got that selected in your columns, you need to do that. Once you do, this area is going to come up here, and that's really our calculator area, okay? If you don't have Theo Price selected as one of your columns, it's not going to show up for you, okay? So you've got to have that. Now we're going to click on this, and we're just going to go to the bottom and hit reset. Just start it out nice and clean. There was some old data in there, so we want it to start over. We want it to start over with today's date. And we're going to say, what if the price of the stock goes up to 38, which is not the full length of the flagpole, a little bit down from it. And we said, what if it goes up then $4.71 to make it to $38? We'll put that value in here. Now, if we have a good reason to say implied volatility may adjust, we could lower the implied volatility percentage. We could add to the volatility percentage. As we look back here on the chart, I don't have implied volatility up, but if a stock is moving up, its volatility probably, well, sometimes it can grow. Let's just add that on the chart real quick. Implied volatility. And let's just kind of put it there. Make it a little bit bigger so we can see the size of this line here. And implied volatility, well, it dropped at earnings. Okay, so it's kind of been dropping here, down at 0.23. We might expect that it could drop a little bit more. Sometimes when stocks run up, if there's like big news and they gap up and something like that, sometimes that can increase the implied volatility. But if it's generally just kind of maybe trading up, it doesn't go at a real steep rate until maybe it comes into earnings. We can see how it ran up here prior to earnings. So it may move a little bit. It might not move a ton. But let's suppose maybe it pulls back minus 5%. Okay, so maybe it drops a little bit more. Not a big amount. If you don't have a good reason to change the implied volatility, just leave it alone. Don't put anything in there. And then we want to say, okay, we are doing a what if. What if the stock were to go to 38? And what if it were to do it by a certain date? Then it'll put account for time decay in here. So the market's actually closed today. We won't get into the trade until tomorrow. So let's go ahead and give it a week. Okay. Actually, let's go to the 22nd. Okay. We'll give it a week and a couple days here. Okay. So that would be next Friday. So it'll account for time decay. So theoretically, if this stock, the 32 strike price, we might buy for 225. And it's saying, okay, in a perfect world, if it went up $4.71, which maybe it doesn't, maybe it even goes down, and implied volatility drops 5%, the value of the option roughly might be around $6.08. So that's how you can say what if, play what if, the parameters of what you're looking at on your trade. Then if we wanted to, we could say, oh, well, let's put a target price out here, maybe at what the theoretical price is, or maybe something close to it. Maybe we notch down a little bit, because that would be a very healthy gain on that, $2.25 to $6. Yeah, that would be. Now, you would put your own guesses in here, okay? We don't know how long it might take for the stock to make the same move here. It only did it with 2 candles, but this candle here was really large and it gapped up, okay? So that's why we want to give it enough time to maybe do that, okay? So this is what we're going to do. We are going to use the theoretical price of the option. We're going to use that as our target, but instead of targeting, say, what happened here? Instead of targeting 608, what if we come off of it a little bit? What if we go like 575? Okay, 5.75 equals our target. And then let's say if the value of the option goes in half, we want to get out. Okay, that would be our stop loss area. So let me get on the right one. We're going to do a buy custom OCO bracket. And in this first order, we're going to put in that theoretical price that we just came up with. And you could use the whole amount. You could use that 608. I said, let's back off a little bit. We're backing off the target a little bit. We're backing off that value a little bit. We're not trying to be greedy. Okay, that if it went from 225 to 575, that'd make you a happy camper, right? And then for the stop loss piece here, half of 225 is going to be in the neighbor of what? That's going to be about a buck. Should we just go with a $1.15? We'll go with a $1.13. We'll go with a $1.13. That would be 120, 226. Okay. We're going to make that be our stop. So we're going to make this good till canceled, this good till canceled. And let's talk about position sizing this, because we can risk up to $1,500 on any particular trade we decide to get into. So $1,500 divided by our max theoretical risk of 225 a contract says we could do 6 contracts. So that's what we're going to do. We're going to put in our 6 contracts. I'm going to select on that link so it brings up the quantity so they're even there. So Lola says, so the calculator is showing the result on the options chain. Yeah, that column, that's where the answer from the calculator shoots out. And no, it'll do it for the whole chain, not just what we're looking at in September. It does it for the entire chain. So that you could go, well, gee, what if I really was not interested in September? What if I wanted to go longer dated? What if I want to go out to January and I want to give it a different amount to run to? Yeah, you can run all those numbers, whatever your assumptions are in this little calculator. Yeah, that's what it's going to calculate for. And you can also see here on the put side, if it went up and you were thinking you wanted to put, and this we're not, because we're not going to be bearish on it. It'll also show you the price so you know what's going on with it as well. Okay, and we're just going to stick with the September option. Now, this is a paper money demo account, R1. This is not a live account. It's an account that we have as coaches that's kind of a hybrid account, that it's a demonstration account that we can utilize. Okay. We can't show you any of the values or anything like that, but it's a paper account. Okay. And Ricebird says, so using this tool will also estimate the Greeks. If we showed the Greeks differently, I didn't actually look if our delta changed here, but it probably did because we're not starting at a 93 delta. So yeah, it changes the Greeks here as well. Good point. You get a gold star for that one. Yeah. See if there's any other questions here on this. I think we're caught up between Cameron and myself. Thank you, Cameron. We're going to go ahead. We're going to put that through on 6 contracts. And this is going to our, not our trading a smaller account, to our option strategies class. We're going to send this on. We're going to track it. Can we adjust our target? Absolutely. If we get, something way less than $6, maybe it goes up to $4 and we're happy campers. Could we get out? Absolutely, yes. Okay. So we will monitor this trade closely. Okay. Another one I want to take a quick look at, and this one's going to go a little bit faster here, is on Wayfair. They had a good earnings report. They gapped up. Many times the bottom of the gap might act as a support area. And it looks like maybe it did a little bit here. Looks like maybe it was just bouncing up off the 10-day moving average here today. So, some traders might like that for a bullish entry. On this particular one, let's go to the trade tab. Let's bring up Wayfair. I was thinking of doing something fairly aggressive that we don't do in this class a whole lot. Okay. I was going to look to do a synthetic where we buy a call and sell a put, okay, at the same strike price. 75 is going to be our at the money. So we're going to actually go in the money a little bit here. Don't necessarily want to sell something that's in the money on the put on this one necessarily. It's not deep in the money, I know, but it is a little bit in the money. So on this one, let's go. We're going to go 72.50. What I'm going to do here is right mouse click, and I'm going to say buy, and then we're going to come up here to synthetic. What it's going to do, it's going to grab the strike on the put side as well, and it's going to give us a net because by selling the put, we bring in a credit that can lower our net debit. So we're getting into the trade for in the neighborhood of around 255 as opposed to 620. Now, what I wanted to show you on the Theo Price Calculator, we're going to use all our time here today, is what if we could get up to 7806? Okay, we might use that as a target on this, kind of like a little target with two aggressive bullish trades here. So 74.63 minus 78.06, we're looking for a $3.43 move. So we're going to come reset the calculator, and we're going to put in here plus $3.43. Okay. We will leave implied volatility alone, but we do need to give it a little bit of time decay here. Okay, so we got to do some time decay. And let's give it, let's say on the 20th. This will go in tomorrow. We'll go to the 20th. And then this gives us the value of what those options would be. Okay, so on this one, the 72.50 call, it looks like its theoretical price actually didn't go up a ton. In fact, it went down. Let me make sure. Time decay was more pressing on this. That's interesting. Oh, that's because it got rid of my stock there. Plus 3.43. There we go. Okay, that looks better. So our option price would go from 620 on the call to 786. So we'd take that difference there. And then on the put side of things, we collected 350. If it made that move for us on the theoretical price all the way back to here, then what we sold for 350, we could go buy back for something in the neighborhood of 196. Okay. I'm going to put that as our target on this trade. I'm going to put that net amount so that it executes it for both sides based on that price. Now, my time is up. I would like to experiment with this a little bit more in this class. So next week, we will kind of continue and kind of show you how both these scenarios played out, both of these white bullish trades. All right. Whew, we made it through. So, number one, if you'll fill out that survey for us, we always appreciate it as coaches when you take the time to do that for us. Helps us. I'll read every single thing you write, so will our managers. If this was helpful to you today and you got some exposure to the calculator and you hadn't had that before, yeah, if that's helpful to you and you think others might find that useful, go ahead and like that. And then follow Cameron and I on X. Now, one last thing. If you want to see a little bit more detail about the calculator before we get together next week, I did a class on Monday on Barb Armstrong's Trading a Smaller Account, so that was yesterday. I'll put a link to that class in there where we spent a little bit more time on the Theo calculator than what we were able to spend in this class today. All right, Cameron, thank you so much. Everybody have a great morning. We'll see you bright and early at the opening bell at 9:30 Eastern tomorrow. Have a good evening.